Yes, so accounting for agricultural activities, accounting for agricultural activities. So under this particular standard, it actually deals with accounting for activities involving. So the standard IAS 41, deals with accounting. It actually deals with accounting, for what we call biological assets, and of course now in this case, and biological assets, and probably in this case we can talk about agricultural produce and agricultural produce. So those who are involved in farming or, for example, agricultural activities, they are still enterprises that in this case need to be able to, for example, account as to whether in this case they're having to make a profit or maybe a loss. Or for example, in this case, within the farm or within agricultural activities, we can have different kind of activities. Maybe in this case, having to plant maybe crops, having to, for example, in this case, be involved in what you're calling keeping animals, keeping dairy animals. So you would like in this case, for example, to know if I'm having to keep dairy animals, or for example, in this case, I'm having to be involved in planting crops, then eventually I sell the produce. So do I actually realize any form of profit or not? Or for example, in this case, am I effectively utilizing my resources within the agricultural activities or within the farm? And therefore, this particular standard will be able to outline in this case as to how you'll be able to deal with such kind of, for example, activities within the farm or within what you're calling agricultural activities. So when you talk about, in this case, a biological asset, so a biological asset in this case, so when you talk about a biological asset, when you talk about a biological asset here, so these are simply living animals within the farm or within the agricultural activity. So they are simply, these are living animals. These are simply living animals. They can be living animals. So in this case, we're talking about what maybe cows. It could be dogs that you've been able to, for example, keep at home. So we're talking about, in this case, living animals and, for example, in this case, plants. So living animals and plants. Living animals and maybe plants. So this eventually, probably in this case, we're talking about what maybe crops that you've been able to plant. Maybe it could be tea, it could be coffee. So that in this case, you're having to deal with, those are part of the crops you're having to deal with. So these are what the ones you'll be able to refer to as biological assets, So these biological assets, then in this case, we can be able to recognize, for example, in this case, a biological asset, if we can be able, for example, be able to determine that in this case, this particular owner of the farm, or maybe the person involved in agricultural activities, is able to, for example, in this case, do maybe control, or in this case, is actually able to do control this particular kind of an asset. So if you can be able to determine, he can be able to control this particular kind of an asset, then we can be able to determine it as having to be a biological asset. Then these biological assets also we're having to talk about, there'll be some aspect of what we call transformation. There'll be some aspect of what you're calling transformation. For example, in this case, if you end up having to buy a calf, if you are involved in agricultural activities, in this case, you end up having to buy a calf. If you buy a calf in this case, it will be able to transform. It will be able to transform and eventually become a cow. This particular cow will be able to produce some kind of what you're calling a produce. There will be a produce, which will be the produce here. Maybe in this case, you'll end up having to get milk, or maybe you'll end up having to get what you're calling meat. So if there can be some kind of, for example, in this case, what you're calling a transformation, then we can be able to determine this one as having to be a biological asset. Then, of course, you can be able to see there's a produce at the end of this particular cycle. So this one can be referred to as a biological asset, because in this case, you can be able to see if there's an owner of the calf, then he's able to have a control over this animal. That, of course, you can be able to see it can be able to transform or change. It can transform or actually end up having to change. Then we have at the end of it maybe a produce. For example, in this case, if there are plants or maybe crops, then you can be able to see some kind of an aspect of transformation, or maybe what you're calling change. If it's an avocado, then in this case, there'll be a seedling. then you'll end up having to plant in your land. Then eventually it will be able to transform, grow, and eventually start producing what? The fruits. So the fruits now in this case end up having to become what? Produce. So those are some of the features in this case we can be able, for example, utilize to determine whether in this case we have a biological asset. So for us to know it is a biological asset, we can be able to, for example, account for it under IAS 41. Then you're having to say there should be some kind of like key features that should be able to come out regarding what? The asset. For example, the entity, or basically in this case, for example, the owner of the farm or agricultural activity has some kind of what you're calling what? Control over the asset. So the features here, features of the biological assets, the features of the biological assets that you're having to talk about, the features of the biological assets you're having to talk about in this case, biological assets. So the entity should have control over the asset for us to determine whether it will be a biological asset to be accounted for here. Then the entity should have control over the asset. The entity should be able to have control over the asset. Then of course, in this case, there should be some aspect of what you're calling what? Transformation. Some aspect of what you're calling what? Transformation. And of course, you can be able to do what? Maybe quantify. So the value of these assets, the value of the assets can be quantified. The value of the asset can be quantified. So we can be able to quantify the value of the asset. For example, in this case, we'll be able to say maybe it is a calf you bought, maybe you bought it at maybe 3,000. But of course, in this case, you'd be able to value it at the prevailing market, for example, what conditions. So eventually it basically transforms, it becomes a cow. So maybe in this case, it is after maybe how many years? 2 years. So you look at, for example, the prevailing market conditions. In this case, you'll end up having to value it at what? At fair value. You'll value it at fair value. So these biological assets you're having to talk about in this case, they should be one that in this case, you can actually be able to end up having to quantify. Then in this case, for us to say it is a biological asset, there's an expectation of an inflow. There is an expectation. There should be an expectation. There should be an expectation of an outflow, an inflow, expectation of an inflow from this asset. For example, in this case, if you sell the cow, then you'll be able to get an inflow. If it's the milk, if you end up having to sell, you'll get an inflow. If it's the meat from the cow, if you sell it, in this case, you'll end up having to get what? An inflow. So these are some of the features of what you're calling what? Determination of what is actually what? A biological asset within what? Agricultural farms or maybe agricultural activity. So this biological asset, the entity, or for example, the owner of the farm should be able to have control over this what? Asset. Maybe in this case, ownership of the asset. Then the value of the asset can actually do what? Be quantified. And we're having to say, you can be able to quantify it at what? At fair value, whereby you determine, for example, the prevailing market conditions. At what, for example, rates are we having, for example, sell this cow under the prevailing market conditions under that point in time. Then for it to be a biological asset also, then in this case, you're having to have some kind of an expectation of an inflow of money coming in as a result of what? The biological asset. So those are some of the key features here that you can be able to use, for example, to determine whether now in this case we have a biological asset that can be accounted for under International Accounting Standard number 41, International Accounting Standard number 41. Then of course, overall, as we've been able to say, agricultural activities within an agricultural farm, there'll be some aspect of what you're calling what? Transformation. Then of course, some aspect at the end of it of having what you're calling what? A produce. Just as you've been able to give an example there. See, the owner of the farm is able to buy a calf. The calf is able to transform, then eventually can produce some kind of like a produce, which is actually milk. So overall, this one will be determined to be a what? An agricultural activity. If it's an avocado, there's a seedling that eventually transforms and actually matures, then produces the avocados that can end up having to be sold out. So that kind of a transformation, then of course, in this case, ends up having, for example, make us determine within the farm that is actually what? An agricultural activity we can be able to account for under International Accounting Standard number 41, Accounting Standard number 41. So of so much essence, It is for us in this case, for example, to be able to know. So which kind of accounts will you end up having to maintain whenever, for example, in this case, you're having to be involved in what you have been able to refer to as what? Agricultural activities, whereby we've been able to say there's some aspect of transformation, there's some aspect of ownership of biological assets, there's some aspect of transformation and having a produce, that in this case, you can be able to determine it as an agricultural produce, or maybe eventually a biological asset. So how will you end up having to account for this? How will you end up having to account for this? So, of course, for those who are involved in agricultural activities, they'll in this case, for example, be involved in different activities. So maybe in this case, you could end up having to find a farmer who's, for example, involved in what? Keeping maybe what? Animals. So maybe in this case, involved in keeping what? Maybe animals. Another one is involved in what you call what? Crop farming. Or maybe in this case, there's another one who's actually basically involved in having to maybe keep what? Maybe both of them, keeping both of them. So overall, in this case, if you're involved in keeping animals, or maybe in this case, you're involved in having to maybe in this case, undertake crop farming, then there is a very important account in this case you'll have to be able to maintain. So this particularly important account will be able, for example, enable you to determine what could be, for example, the inflows and what could be, for example, the outflows. Then eventually, in this case, out of that activity, you can be able to determine whether you've been able to make a profit or loss, a profit or what, or loss. For example, now in this case, if I'm involved in dairy farming, maybe in this case, I ended up having to do what? Incur money to purchase what? The dairy animals. So that will end up having to be what? Maybe in this case, the amount I actually spend in having to carry out to buy these particular animals. But of course, there are some expenses incurred here. For example, you'll end up having to buy dairy milk. You'll end up having, for example, pay farm laborers who, for example, support you in having to do what? Feed the dairy animals. So the difference between, in this case, for example, the inflows regarding, for example, the sales you've realized, maybe it could be out of meat, maybe it could be out of, maybe in this case, milk from the dairy animal, which basically in this case will be the sales. You have to, in this case, get the difference with maybe in this case, the cost of the sales, minus the expenses, as to why in this case, normally you determine what? Profit. Then at the end of it all, you'll be able to get what you're calling what? A profit. So in this case, the account to be maintained, the key account to be maintained here, we can be able to have what we call what? A revenue account for each and every what? Activity. A revenue account for each and every what? Activity. For example, if you're involved in crop farming, then you'll end up having to prepare a revenue account for crop farming. In this case, if you're involved, for example, now in this case, in what you're calling, for example, livestock farming, then in this case, you'll prepare a revenue account for livestock farming. So that in this case, you can realize how much you've ended up having to realize as a profit or maybe a loss out of what? Livestock farming. So in this case, you're having to say the key account, part of the key account. So key accounts to be maintained. Key accounts to be maintained here. So of course, now in this case, we'll have in this case the revenue account for the agricultural activities, revenue account for the agricultural activities, specific revenue account for the specific, and we would say the specific agricultural activity. For example, if it is crop farming, you'll do a revenue account for crop farming. If it's livestock, you'll do a revenue account for livestock farming. Then in this case, there could be those expenses you're having to incur, but you cannot actually specifically, for example, maybe put them under crop farming, or maybe in this case, you can put them under livestock farming. So in this case, you'll have to, for example, in this case, prepare a general revenue account, or in this case, you can be able to refer to it as what? As a general profits or loss, what? Account. So for those kind of, for example, activities, you cannot actually specifically put them under, for example, crop farming. Maybe in this case, it could be insurance of the agricultural farm. You've taken up an insurance for the agricultural farm. So you've not specified whether in this case it is for the dairy animals or maybe it is for the crops. So it simply means that it cannot go to a specific revenue account. So in this case, it will be able to go to what? The general revenue account, that basically combines other expenses regarding what, for example, in this case, what? those different kind of activities within the farm. Then, of course, now in this case, you'll end up having to balance your things. You can end up having to come up with the balance sheets. You'll come up with a balance sheet, or maybe in this case, balance sheet. You'll come up with a balance sheet, or maybe the statement of financial position. So these are the key accounts to be maintained here. So the revenue realized from each and every activity, then the general revenue account, then eventually you can come up with a balance sheet, or maybe a statement of financial position. So with this, then you would have already been able to do account your agricultural activities. For example, if you're involved in farming activities. Remember, we're having to say you'll basically get a profit from the revenue account for specific activities. For example, it is maybe crop, then you'll get whether you got a profit or not. If it is livestock, you'll find it in this case whether you get a profit or not. Then when you get the specific profits, remember, they'll still come here as part of the revenues, part of the incomes. So when you are preparing this one, as you're getting the difference between the incomes and, of course, in this case, the expenses, part of the revenue, for example, to include in the general revenue account, because this one you've been able to say it doesn't account for specific, for example, expenses or maybe incomes. But now in this case, as you're having to get the revenues you got generally from the agricultural activities, which are not specific to a specific activity like maybe crop farming or maybe livestock farming, once you get the profit, for example, for the crop farming and for the livestock farming, then eventually it will be part of the revenues here as you prepare your general revenue account. Maybe in this case, you'll be able to realize as we'll end up having to maybe in this case, focus on looking on an example. So how will this revenue account of yours look like? The first one there. How will this revenue account of yours look like? How will this revenue account of yours look like? The revenue account of yours will be able to look like this. So you can have, in this case, a farm revenue account. So the first account you're having to say, you'll be able to prepare a farm revenue account for the specific activity. Maybe in this case, it could be maybe livestock revenue account, or maybe it can be crop revenue account. Maybe if you are involved in poultry farming, then you'll be able to say it is a poultry farming revenue account. So in this case, it is just an account, as I've already been able to indicating, for example, the difference between what are the inflows and, of course, the outflows. The inflows and, of course, the outflows. So, of course, now in this case, most obviously, this side will be able to have in this case, what has been realized as as the sales. What has been realized as the sales, you can be able to indicate there. So, of course, this other side, you'll be able to indicate, for example, the costs you've incurred, the costs of sales. The cost of sales here, which basically will likely involve you having to indicate, maybe, in this case, you'll be able to indicate the purchases. You'll indicate the purchases. So here you'll have the purchases. You've actually ended up having to make. Then, of course, now in this case, we can be able to have of course, there'll be the opening stock you had. For example, if there are dairy animals, there's an opening stock. So this will be the opening stock, which is normally part of the purchases. So then, of course, if you bought others and included them, you'll have to add. But remember now, in this case, probably to reduce the cost of sales, to get the cost of sales, you end up having to do reduce with the closing stocks. And of course, to reduce this particular, for example, cost of sales, you'll end up having to do maybe credit. You end up having to credit here now the closing stock. So the closing stock will actually be this side. So the closing stock will be this side because you want to end up having to reduce your cost of sales. So you can be able to put now in this case the sales this side, which are normally on the credit side, the closing stock, simply because now in this case it is ending up having to reduce the cost of sales. It will be that other side. So you'll be able to put it at that other side. And then, of course, now in this case, we can be able to have other expenses you might have incurred. You can have other expenses you might have incurred. For example, you've been able to say that in this case, if you're involved in dairy farming, which is livestock, maybe in this case, you bought dairy feeds. Or for example, in this case, you bought what you could have ended up having to feed the animal. So those will be the other expenses which you'll end up having to do maybe include. Remember, in this case, when you talk about the sales here, probably you got meat out of these dairy animals. So you sold. So in this case, it can be meat. If it's livestock, it can be meat. Maybe it can be milk. It will be part of of the sales. So in this case, if you end up having to realize, maybe in this case, so of course you'll end up having to balance you'll end up having to balance your account. You'll balance your account. You'll balance your account. If it happens, for example, now in this case, the debit side happens to be more than the credit side, then that will end up having to be a loss, which you'll end up having to put there. But if it happens, for example, in this case, maybe the credit side is actually more than, in this case, what? The debit side, that will actually be a profit. It will actually be a profit, because remember, to realize profit, you get what? Sales minus the cost of sales. So if you minus the cost of sales, you get the difference here, which basically will be what? Will be the profit. So the profit will basically be this side. And of course, if there's a loss, it will be this side. So how will the loss arise? If the cost of, for example, in this case, coming up with the sales are actually more, then in this case, there'd be a loss. But if in this case, if the sales side happens to be more than, in this case, the debit side, or the side of having to incur expenses, then that is actually what you are calling what? A profit. So you'll be able to balance your account there. You'll be able to balance your account there, and eventually, in this case, be able to do what? Get your profit, or maybe what? Loss. Get your profits, or maybe loss. So that is what you're calling what? The specific revenue account that in this case, you'll end up having to do what? Prepare. So you said if you realize a profit here, then these profits will go to the general revenue account, or the general profit and loss account, which basically lists those incomes or expenses which are not specific to an agricultural activity. For example, you've been able to say, maybe in this case, you incurred what? A manager's salary. So the manager in this case manages the whole farm. He doesn't manage, for example, in this case, specifically what? Livestock and crops. He's involved in everything. So it means that we can't specifically, for example, put that kind of an expense under a specific revenue account. So in this case, we put what? In the general revenue account. So in this case, we'll be able to put the other expenses in the general revenue account if they're not very specific to the farm revenue account, to the farm revenue account. So of course, in this case, there are those specialized kind of transactions, or special kind of transactions that in this case will arise whenever, for example, you are ending up having to deal with maybe what you're calling what? Agricultural activities. For example, it could be maybe in this case, on a particular day, it happened that while your farm laborers were working, you still actually did what? Participated in having to do what? Maybe carry out the work that was supposed to be undertaken. Maybe in this case, on that particular day, you participated in having to do what? Maybe till the land. So tilling of the land. So as in this case, they had djembes. They were basically, in this case, for example, having to till the land. You still did what? Participated. So it means you contributed what? Something. You contributed what? Something. You basically put in more resources as the owner of this particular what? Farm. Or alternatively, it could be, it happened that in this case, on a particular day, there was one of the farm laborers who actually ended up having to tell you that I don't want to be compensated through a salary or a wage. But now in this case, what I want you, for example, is for you to be able to give me part of the farm what? Produce. So how do you deal with, for example, such? Maybe in this case, one of the farm laborers indicated to you, don't pay me a wage or a salary, but in this case, compensate me or remunerate me through what? Maybe part of what? The produce from the farm. Maybe he wants milk on each and every day within a month, that it will end up having to cover what? Maybe in this case, maybe part of the salary or maybe wage for a number of days. So how do you account, for example, for this, in this case, what you're calling what? Special transactions. So agricultural activity, special transactions, accounting. So accounting, how you account, how to account for special transactions, how to account for special transactions in agricultural activities, how to account for special transactions in agricultural activities, how to account for special transactions in agricultural activities, So in this case, if it happened, for example, number one, we have maybe, it could be maybe in this case, labor services were provided, labor services. If you have labor services having been provided, we have labor services having been provided by the farm owner, If you have labor services having been provided by the farm owner, what will happen in this case? You will take, or basically in this case, you'll end up having to debit expenses account. Basically in this case, this one, specifically could have been an expense incurred regarding what maybe salaries or wages And then of course, remember when in this case, the farm owner provides part of the labor. Is like in this case, is having to inject more resources into the business. So in this case, you'll end up having to do what? Credit. You'll be able to credit the capital account. Credit the capital account. The capital account. It's just like in this case, he would have put in more resources in forms of money, but now he has participated in undertaking what? For example, the agricultural activities or participating with the other farm laborers. So he has injected in more resources. Remember, because if he had to pay a specific laborer, as I said, for example, there were 6 laborers to be engaged. There were 6 laborers to be engaged. But of course, now in this case, he ended up having only to engage 5. So the 6th one is actually himself. If he was having to pay 400 each, he would have incurred how much? 2,400. But he ended up only having to incur, in this case, only 2,000. So he incurred only 2,000. So there's an extra 400 here, which basically he himself is the one who provided what? The labor. So instead of having to incur more resources, he injected himself into part of the resources in terms of what? Farm labor. So there's an extra 400 gained here towards what? The capital. Because in this case, if you inject resources in a business, you are basically injecting what? Capital. And when in this case, you put capital into the business, you'll end up having to credit the capital account. So this kind of a resource that he was able to put in, it will end up having to increase what? The capital. So you credit the capital account. Then another one, we're having to say that maybe in this case, you ended up having to pay some of the farm laborers through what? The farm produce. So the farm produce you provided in this case in what you're calling what? In kind. So paying farm laborers. So farm laborers having been paid, farm laborers being paid in kind, being paid in kind. So if this is the case, then so you are to pay them. So that was an expense. You'd be able to debit the expense account. So specifically here, you would have incurred an expense. Maybe you are calling a wage. Maybe in this case, it could have been a salary to them, but you basically paid them in kind. Then of course, in this case, this part of the produce you gave, you are supposed to be able to sell it. So you'll end up having to credit, in this case, the sales account. You'll end up having to credit the sales account in this case, which will basically, in this case, just cancel out. You'll end up having to cancel out that kind of what, for example, a transaction. So this is basically what will happen, for example, if you pay your laborers in what we call what? In kind, or having to use part of the farm produce to pay what? Your laborers. Then another special kind of transaction that in this case could end up having to occur, another special kind of transactions that could actually end up having to occur, is, for example, in a situation whereby part of the farm produce, so number 3, the farm owner consumed. So the farm owner consumed, you as the farm owner, you consumed the farm produce. You consumed the farm what? Produce. So it's like in this case, you drew some kind of resources. Remember, under this other one where you provided labor, you are injecting resources. But now in this case, you are basically drawing resources from what? From the business. So if they were supposed to sell, but in this case, you've drawn out of the business. So in this case, we'll end up having to debit the drawings account. We'll debit the drawings account. Simply, you drew from the business. And of course, what you're having to draw out from the business, you are supposed to sell. For example, if it was milk, in this case, you end up having to do what? Your cows are producing milk. You're supposed to sell. But of course, part of the milk you use on a daily basis to prepare tea for your family. So those are what? Drawings you are getting from the business, because you are supposed to sell, but you've drawn out of the business. So in this case, what you're having to draw out, the milk, you are supposed to sell it. So in this case, you'll end up having to do what? Credit the sales account. So these are some of the special transactions that in this case, you'll end up having to, for example, know as to how you can be able to deal with them whenever, for example, the examiner has been able to mention them in the exam question. So, for example, if there was farm produce consumed by the owner, how do you deal with it? If, for example, in this case, there was payment of laborers in kind or using part of the farm produce, how do you deal with it? Or, for example, in this case, if it happens that part of the labor services were actually provided by the owner of the farm, how do you deal with it? So those are the special kind of what transactions. So the other one in this case are just like the other normal transactions you know of course, are in this case, how you can be able to deal with them regarding what maybe having to debit or having to do what to credit, having to debit or having to credit. So maybe in this case, we can be able to look at an example. We can be able to look at an example. We can look at an example. We can look at an example. I don't know if you'll be able to access it. Let me see if I can be able to get the question here so that I can be able to share. Let me see whether I can be able to get access to the question. You can give me like a minute. So the documents I've been able to share. I don't know if you've been able to access it. Just confirm whether you've been able to access that document. Just confirm whether you've been able to access that document. Have you been able to access the document? Just confirm whether you've been able to access that document. No one is confirming. No one is confirming. There's a document I've shared there on the chat. I don't know if you're able to access it. Are you able to access it? Are you able to access it? There's a document I've shared. So confirm whether you're able to access it. I can be able to see. It's not clear on my end. I don't know. You're saying it is not clear on your end. It is not clear on your end. Any other person who has a challenge? I can see Samsung has shared. I don't know if it is clear. You need to download it. It seems Samsung has not downloaded it. You need to download it. Probably in this case, you open from your either phone or maybe computer. So if you have a challenge, then I think probably maybe we'll be able to look at the question some other time, simply because in this case, you cannot actually be able to access it. Otherwise, thank you very much for having been able to join. Santeni sana. So we catch up later. We'll be able to look at the question sometime later. But of course, now in this case, you can look at it at an individual level. So it is the illustration. There's the illustration. So you can use this one. It is a question from May 2012. It is question number 4. Question number 4. Then I think we'll be able to look at it later on. So otherwise, thank you very much. And we catch up later.